Hello, everybody, and welcome again to Crossing the Line with Greg Heym. Clap into the microphone, Ray. It'll sound like there's more people here. Thank you very much. Season 2, Episode 3, or if you're really keeping score at home, Episode 51. Now we're joined by a special guest that will be permanently joining our show, my Alfred E. Newman statue here that was given to me by Ray. So now Ron Guidry is
Thanks, Ray.
Sorry for those of you listening to the podcast, but I'm sure most of you, if you're my age, know what Alfred E. Newman looks like. So what me worry.
See, and I was never into that comic, so
you should have been. It was the funniest thing going in the 70s and 80s. And we're joined by Rae Castrigno.
Good morning.
And just in case the world changes tomorrow, and we always like to point out that we're filming this on the morning of January 22nd. It is unbelievably cold, like single digits cold this morning. Thank you. Who needs to pay for effects? Ray's going to want a raise when the time this thing is over. Look, even Lena's laughing. And we have to point out that Lena is here also, and we have a special guest. We have Morgan Wilkins, who just started working in our research department with me and Lisa Ray.
Yes, very excited.
They are twinning.
The girls, yes.
Very much alike. The hair is very similar. You know, it's really good. So how was the weekend? We always start, even though it's Wednesday, it feels weird, but Monday was a holiday.
I'm a little off.
And Vince Rocco is in here on Tuesday.
That's right. Well, it's Vince's day. So.
Well, don't say we don't respect our elders.
Right.
So
it was good. Football.
Okay.
A lot of football.
Yeah, football is good. You know, 2 exciting games.
Yes.
And we got some exciting games coming up this week.
I know. I'm looking forward to it. So.
I had a lot of fun on Monday. I took my son to the Knicks game, and
right.
I love it that it was a 3:00 start. That's really good because I'm old like that. But beating the Hawks, you know, Knicks fans, there's always this like group of people you hate, and Trae Young is like right at the top of that list. So
he's the Hawks.
Yeah.
Okay.
And he's a short little guy. He's only like 6'1", but the guy can hit from anywhere. Mm-hmm. He could shoot from here and get in the basket at the guard. Did get some sad news yesterday. I don't know. Ray may know who this person is, but I don't know if anybody else does. Garth Hudson died yesterday at the age of 87. Well, he wasn't a punk artist. That maybe was. No. But he was the last surviving member of the band. Now, the band, very influential group, got their name from being essentially Dylan's backup band and Ronnie Hawkins' backup band. They just got known as the band. And he was the oldest, dying at 87. But, he was a phenomenal organ player. Check out the song Chest Fever. It sounds like a Bach thing in the beginning because of the organ he's playing. Apparently a big influence on Elton John. He was actually a trained musician. His parents were musicians. So his deal to join the band was each of you have to pay me $10 a week for music lessons. Because then I can tell my mother I'm a music teacher, not some wannabe guy in a band. So...
made it work.
You know, it's funny because the band made what you would call like Americana music, very American sound, and their main songwriter and 60% of their group were Canadians. So,
there you go.
Just great music. I didn't get into it till older age, but there's your musical recommendation. Go check out the band's second album called The Band. There is some great stuff on there. King Harvest is Surely Come is my favorite. It's a really great yet dark song.
Never listened to any
about farmers and harvests, and unions are in there somewhere. So anyway, coming to you as we always do from beautiful Studio 1873, decorated by our buds at the Everset.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
All right, so we had 2 big stories last week. What was the first bit of news that came out? And by the way, these were both kind of good news.
Well, these are your favorites, your PI brothers.
The PI brothers rolled into town to save the day because, me and Scott Nadler were here last week crying about the better than expected jobs data and what it did to stocks and what it did to bonds, which in turn made mortgage rates go up for a 5th straight week. We'll get into that in a little bit. So we needed two brothers to ride into town to save the day. You know,
Cue the music somewhere in there.
like the Lone Ranger in Tano or something.
So that's what I hear in the back of my head when I'm thinking somebody riding in on the horse.
Or the Magnificent Seven. Bum, 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 bum. We just get that going. And or just Clint Eastwood by himself. That would have been enough.
But I was waiting for your musical reference.
Wow.
Because there's always one musical reference, right? Right? At least one. There's always at least one musical reference, and I usually don't get it.
Okay, well, it's okay. So, you know, this is... The markets were looking for any sign that, like, okay, maybe things aren't running as hot as we thought. And, you know, you had to look a little bit to find it. But so it was core inflation that saved the day. Core inflation, again, is when we take out food and energy prices because they can be volatile. And that really showed in this month's data because energy prices, particularly gasoline prices, had been declining for a couple of months. They rose pretty sharply. So last month. So that shows you it's very fickle. It's up, it's down, it's up, it's down. So core CPI rose 3.2% over the past year. Now you hear that number and you go, wait a minute, like you lost your mind, Greg? I thought the Fed was shooting for 2%. Why are we happy about 3.2%? Well, because the market was looking for 3.3%. So that 0.1% difference.
A huge difference.
A huge difference because it sort of erased the memory of the week before and led to a phenomenal day for the stock market. So that data came out 8:30 on Wednesday, right, a week ago.
Right.
Stock futures up right away. Everybody pretending the week before that didn't happen. And just for Friday, the S&P 500 was up 1%. And NASDAQ was up 1.5%.
So it's good they have short-term memory then.
I always say Wall Street's all about, you know, the future. And the past is the past. They easily forget things.
Well, it's good for investors.
Unlike us humans, we tend to hold on to things potentially too long. And, you know, we got, and there's another piece of what sounds like bad news that is good news. You know, we always talk about housing being responsible for over half this increase every month in inflation. So we found out that over the year-over-year, housing inflation is up 4.6%. You go, like, right, that's way above 2%. Like, what's going on?
However,
it's the smallest annual increase in 3 years, so we're celebrating that. If we could celebrate 0.1%, we can celebrate this. You know, we've talked about the crazy way that housing inflation is measured in 6-month intervals. It's like, all right, it'd be like the doctor saying, here, take this antibiotic for a week and then check back with me in 6 months. Like, you know,
it's not a great measure because it's too far.
Well, they've
out.
been circling back a couple of times now, and it hasn't shown any decline. And, you know, one of the things that we see when we look at existing home data and other housing reports is that prices are not declining.
No. And
that's shocking at a time when rates are rising again sharply. So the CPI came in and like shot most of the bad guys, and then PPI, which actually come out the day before, shot the little one, and then CPI came in like John Wayne and just
cleaned up,
took care of the rest. But you know, this could be a short-lived thing. Both the things we're going to talk about today are going, you know, to not be so important because the final word on both, in this case, inflation, and we're going to talk about retail sales, comes next week when Big Sister comes into town, right? The core PCE report.
Personal consumption expenditures.
Price index, yes.
Thank you.
So then
I always forget the rest
us,
of it.
We like it more, and this all started really with Alan Greenspan years ago, because we always talk about CPI. If steak gets expensive, people will buy more chicken. CPI doesn't really adjust well for that. They kind of ask people what percentage of their money they're spending on certain things, and they're often very wrong. I forget the numbers, but we joked about this a while ago about alcohol, that people were grossly underestimating the amount of alcohol that they were purchasing. But with PCE, they have more complete data on sales, which gives them really good data on prices. And, you know, but again, it doesn't mean that the other ones don't move markets. You see what happened.
Right, a tenth of a point and the stocks went crazy.
Right, and they've been mostly crazy since. So That's good. We don't like it when they go down.
No, we don't. Some of us would like to retire one day.
How could you want to retire from all this? Right, Lena? Isn't this like the most fun ever?
The mostest.
See, we put a mic by Lena, so you might actually be able to hear her. Yeah, that's all right. To the point, we like that here. You know, we used to always try to be informative, edgy,
Funny,
no.
concise,
and entertaining.
At all the same time.
We couldn't do even one of those in a given week, so we gave up on that. I don't know why I'm reminding anybody that we had higher goals before we started this, other than play with bobbleheads and make jokes. But on a slightly more serious note, I mean, this is not bad news. Obviously, it would have been bad news. Worse than expected is always the worst news you could get, or higher than expected is bad.
If they're at or beat expectations,
yeah, that's and
life's
again,
good.
It goes to what my professor in grad school, my advanced investment analysis class, said. You don't have to know the number. Is it going up, down, and is it better or worse than expected? You figure that out, and that's all you need to know. And you know how the market's going to react. But again, we keep pointing this out. The Fed's target is 2%. They've even admitted it could be a couple more years till they hit that target. So that's the concerning thing. I think that they thought things were moving in the right direction, and right about the time they started cutting rates, the progress started stalling. Not because of the rate cuts.
2020, right? So
You could have just asked me. I know that ever since I converted to the dark side of the force, I can see the future. So
okay. What are the lotto numbers coming up?
that would be too easy.
Because it's like how many hundreds of millions? So share.
No, why would I share? Then I got to share in the pot. Anyhow, all right. So that's our inflation report. And before we get to the next item, we have another message from our wonderful sponsors who we love, and that good-looking guy in the video, CrossCountry Mortgage.
Calling all real estate investors. I'm Scott Nadler, VP of Mortgage Lending at CrossCountry Mortgage, and it's time to level up your portfolio. Whether you're a seasoned pro or making your first investment, I'll find the right financing to maximize your returns. From single-family homes to multi-unit properties, I'm here to help you crush your investment goals. Ready to grow? Let's connect today and make it happen.
And we are back yet again. And now we have the next item, which we teased. Wait, I'll give you guys listening or watching a chance to see. Remember, we kind of teased it. All right, what are we talking about now?
Well, we have to talk about retail sales.
Right. And retail sales are important because consumer spending is about 70% of gross domestic product, which will come out next week too. Everything is coming out next week.
Yeah.
So tune in the week after next, and we'll have a lot of cool stuff to talk about.
And they'll know everything.
Yeah. Well, we had good stuff, last week. This week, we get existing home sales on Friday, and that's kind of about it. But next week, you got GDP, you got PCE, and some other letters I probably forgot about. So retail sales rose 0.4% last month. Okay, that seems, they're going up, right? Mm-hmm. One thing to always remember, they're not adjusted for inflation. So that increase is not so big when you take, take inflation, but it's going up. That's good. And that was below the 0.6% increase economists were looking for, but what do they know? And it sounds disappointing, like you cue the want thing, but the thing that people forget about is the November figure was revised up to 0.8%. So the fact that it was, that much higher than the revised up figure, all right, we'll take it. That's pretty cool.
But I wonder if a lot of stuff got pulled into, when we talked last time about the Black Friday, Cyber Monday, I forget what the Tuesday now is referred to, if it's drawing the sales out of December into November, and the revision is because some of that gets recalculated.
It could be part of that. I mean, holiday spending in general was up. I think the number was about 9%.
It was up a lot. I mean,
that's what I saw. I thought it was 9%, but
I don't remember the exact
I don't
number.
know. We should do better research on this.
If we only had a research department to give us good research.
It's all in here. Nobody's
at work right now. That's why. There you go. We got no good research.
So, I look at this every month. They break it down by category, and you say, well, what's interesting here? A 0.3% decline at sales at restaurants and bars. The first decline in 9 months. I don't know. Maybe
Holiday parties?
the weather. It could be. It could have been a lot of things. I don't know. Maybe people trying to lose weight. Who knows? But even looking at that, there's 13 major categories that they look at. And then there's all these subcategories and stuff, pages and stuff. But 10 out of the 13 categories increased. So that, gotta love that, right?
Yeah.
And that's good. So what does this mean for the fourth quarter GDP figure? This is going to be an important figure. The Atlanta Fed has their GDP now. I say that because it's like all capitalized. GDP now. Because who wants to wait for GDP when I can have it now?
Right. Of course.
Now, is GDP now always right? No, and it's changed multiple times. But right now, they have it predicting a 3% annual rate of growth in the fourth quarter. People are going to say, Greg, that's the past. Well, we don't get economic data from the future. Not yet anyway. They got AI working on this stuff, apparently. But when I tell you, and I'm talking to you listeners and you people watching, that retail sales are good, right? Inflation's running above the Fed's target by over 1%.
Right.
The unemployment rate is at 4.1%. Hiring is incredibly strong. What's the next logical question? Why are we cutting rates? Now, we're not going to cut rates this month, and they're probably not going to do it in their next meeting. After that, they had planned for another full % of rate cuts this year.
Right. I think it was supposed to be 4 cuts.
Yeah. Well,
I thought that's
how they do
what
it is up to them. They really talk about, I think most people assume that Fed action is 25 basis points.
Well, but after the big cuts last year to start everything.
Right. Well, you had 3 meetings. You had basically a full % there.
Right. So a little slowdown to let it take effect.
Right. Because it does take typically at least 6 months, sometimes even longer. And again, that's why you can't wait till you're deep in a recession if you want to really help the economy.
Right.
But nothing in any of this data shows anything
remotely needing any type of a cut.
or that any recession is imminent.
Right.
We talk about, and Scott Nadler, my good buddy. Hey, Scott. I'm going to shout out to my I miss him when I don't see him. He's probably somewhere warm right now, that guy. You worry about the amount of credit card debt, which is over 1.1
Right. We talked about
trillion,
that a few shows.
and the delinquency data, which is getting a little bit scarier by the moment. But the consumers are still out there spending. That's what really drives the economy. 70% of that economic engine comes from their spending. People still hiring. Job openings are up. It's funny because people will turn and say, but so-and-so is laying off, and Meta's laying off, and Microsoft.
And I forget what the initial claims were for last
It ticked up
week.
slightly. It's still in the low 200,000s.
It wasn't anything scary.
No. In fact, after you're off I think it was an 11-week low or something like that. Mm-hmm. When you hit that, going up is inevitable. And that number really needs to be closer to 300,000 claims a week before you start worrying about any kind of
issue
layoffs
with the job.
and,
in the job market.
It seems that people aren't filing. Either they're getting the most generous severance packages in the world, or they're really confident they're going to get another job. Mm. All right, we have to take one more break because, it takes a lot of people to work on the show for another very important message.
What do you really need to know about buying or selling a home? First, it's serious business, and it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft.
All right, now that Lena has started the clock again, in case you those of you watching on YouTube always wonder why I'm looking up, there is a clock, and we try to be aware of your time. And you've probably had enough by now anyway, but those of you who have hung in there, we love you. Thank you very much. I think we're going to talk a little about mortgage rates now.
Yes.
So now you stop me if any of this sounds wrong or confusing, okay, or you want to emphasize something. Okay. So I wasn't shocked that 30-year mortgage rates rose for the 5th straight week. after the jobs report that was going to happen. We'll know the impact that the CPI and PPI reports had on rates tomorrow, because tomorrow's Thursday. Yeah.
Yeah.
A holiday always, especially when
It will
we
throw you
film
off.
2 days later than we normally do. Yeah. So two other things that were noteworthy other than the fifth straight week went up. It crossed 7%.
Yes.
And it's at the highest level in 8 months. All that sounds very scary, right? But again, I hate having to remind you, but I'm legally obligated to, that the average 30-year conforming rate over the last half century is about 7.7%.
So it's still lower than that.
So to say it's high, it's not. To say it's higher than we would like, go for it.
Right.
Or that it's, more than twice as high as it was just a couple of years ago. There was CNBC has this article that came out this week about why you shouldn't expect them to fall anytime soon. And we've covered a lot of this. To me, the real reason is remember, it has nothing to do with what the Fed does with short-term rates. They're cutting the federal funds rate, which is a rate that's not really even used anymore. We've bored you with that before. Right. That's really just trying to get the economy going. And it can have the reverse effect. By cutting short-term rates, you could stoke worries about inflation down the road. The 30-year mortgage rate is based on the future, not the now, and basically follows the same direction as a 10-year Treasury. Doesn't have the same rate. We'll talk about that in a minute. But the 10-year Treasury has been going up because worries about inflation are still there. And that really boils down to the better than expected economic data and the fact that we haven't seen any real progress on inflation over the last several months, right? So there's that concern. You already have that. Right. And then you can throw other things in the mix. And, articles like to do this, throw out predictions or play on people's fears. Because the only thing worse than rates being at 7 is if rates go higher than that, right? And I don't know that look, rates, as the Nadler rule tells us, I still don't have my own economic rule, Ray. We've got to come up with this. Yes,
we'll work on.
Well, the Nadler rule is rates go up a lot faster than they go down, right? So, it's going to be a bumpy road. We've said this when we're doing our predictions. There's going to be, data comes, let's say we have a bad employment number 1 month. That would be good for rates.
Right. Well, we did what was it?
Well, that was October? That was the Boeing strike and the hurricanes. There are plans from the new administration to place tariffs on certain goods. That has people worried about inflation. And I'm sorry, but tariffs do not cause inflation.
Well, can you explain why? Because I don't know that people necessarily
if I'm going to
know.
put a tariff on crossing the line mugs, right?
Oh, no.
If whatever country they're coming from.
Can I get mine for free since I co-host?
Yeah, go ahead.
Okay.
I've already stole 30 of them. It doesn't matter.
Thank you. I'll keep mine. Can't tax it.
Well,
Tariff it.
Just stay away from my Ron Guidry bobblehead. So, when you place tariffs on items, you're usually doing to protect your country's suppliers of that good. And the current administration has been critical of that, right? And that means that, there could be retaliatory. It's like, you're going to tariff this, I'm going to tariff that. And, and then you have a trade war. And that concerns a lot of people. But just by putting tariffs on certain items, that does not mean that you have an inflation problem. We've done this before. We've seen this before.
I was just going to say,
where there's been tariffs and inflation has stayed under 2%. The inflation we just went through was caused by ridiculously excessive money printing. We increased the money supply by 40%. The timing of the supply shortage in COVID did not help, right? But it went away. Inflation stuck around, as we know.
Yes.
Because once you put money into the economy, it's very hard to get it out.
Well, it can take years for it to.
Right. So the titans of the world, and everybody that's smarter and richer than us is in Davos now for the usual forum.
Right, the World Economic Forum.
Right. And they asked Jamie Dimon about this. And I saw this, I thought this was pretty funny. And since Jamie Dimon said it, you got to listen to it, right? And they asked him about tariffs, and he said, quote, "If it's a little inflationary, but it's good for national security, so be it. I mean, get over it." So that's Jamie Dimon telling you to get over it. I didn't say that.
Okay.
I might use similar language. There's no sense. I know that, futures markets are always worried about what could happen, but I think we need a little more to go on. We're starting to get some specifics about possibly starting tariffs for Mexico and Canada next month. We'll see. We'll see what happens. The other concern, too, is that mass deportations would take away the supply of labor, which could lead to problems, wage inflation. Again, we'll see. That is something that is going to happen to a certain extent right away, we know. But does that mean that people without criminal records and jobs? I don't know. We'll see the timing of that. Another concern that has come up when it comes to inflation is there's been proposals of tax cuts.
Yes.
Right? And many times you hear tax cuts, people are going to say, well, what's that going to do with the deficit? We need that revenue. That's our income. You're going to cut our income. Well, if you're worried about deficits, newsflash, it's already blown up. The budget deficit in December was 40% higher than a year ago.
Dang.
And I don't think we cut any taxes in December. In fact, I'm pretty sure we did.
Cut any taxes in a while.
So, again, the federal government has a power that none of us have, and no other government has in this country. They can run deficits. State and local governments have to balance their budgets.
Yeah.
We have to balance our budget, or they take the stuff that we bought. Like, they don't like that.
Yeah, well, banks tend to not like when you don't pay them.
Right. They take your car, take your home. So, let's see some more responsibility. But we'll see. It's anytime we have new people in certain jobs, anything can happen.
No,
but we
there's
should
an
be used to this
adjustment.
by now.
You always have an adjustment period anyway.
And as I've said before, the vast majority of what's talked about typically doesn't happen, or at least doesn't happen to the extent that people think.
Right, proposals are just that. It's a proposal. It's what they plan to do. It doesn't mean that's what's going to come to fruition.
I have tons of ideas. None of it's
Well, somebody should call you then.
Nah, nobody calls. One last thing. So you're saying, okay, the 10-year Treasury, that's 10 years, and the 30-year mortgage rate is 30 years. They're not the same rate, right? No, they're not. There's usually a spread between the 10-year and the 30-year. And pretty much for the last 3 decades, that's been about 1.7%. Now it's 2.4%. Now, why are these lenders pricing in a little bit more? Well, remember, we've had some regional bank crises.
Yes.
Crises?
Crises?
Crisis?
I think it's crises.
Sheep? I'm taking the word, the plural.
We've had some stuff happen.
There's been some stuff. Some banks had some problems. Right here, we certainly saw a lot of that. So they're a little more risk averse, or at least worried about it a lot more.
Yeah.
So, I mentioned last week I watched The Big Short, and
Oh, it's a great movie.
It's fun. It's great when they can make economics sound fun. Or
no,
funny.
but I think it explained. I remember watching the movie and coming out going, well, it really kind of put it into layman's terms. Like you could walk out and understand what happened.
Right.
At least certainly much better. And you don't need an economics background to follow,
No, don't tell them that or they'll fire us because why pay for these economists?
Because there's things that we know that they don't. Right. We keep it to ourselves.
But they don't want to know those things. So what do they need us for? All right. So let's make sure we covered everything. The final word on rates is there is no final word on rates. They're going to go up and down. But, for those of you we talked about at the end towards, September when rates were sitting right at 6%, that was the time. Go for it.
Jump in.
If you didn't go for it then, and now you're mad rates are 1% higher, we get it. But as my buddy Scott Nadler always says, a 30-year mortgage is not your only option. There are other ways to finance a home purchase. There are concessions that can be made. Rates can be brought down. Talk to your mortgage professional because the rates are going to stay near this level for a while.
Yeah.
Again, the only thing that's really going to bring rates down is the only thing that really brings housing prices down, and that's a slowing economy. In terms of housing prices, really, you need a recession, and nobody wants that.
No.
People are waiting to declare, did the Fed get the soft landing or not? When inflation's over 1% above your target, you do not have a soft landing yet. In my opinion, we can argue about it. Doesn't matter. We should be happy the economy is still doing well. We just needed to do a little less well.
Right.
And to find that sweet spot has been the problem. The Fed has only engineered one soft landing in its history. So, let's hope this is the second one.
Well, it's like steering a big ship. Small maneuvers can be wide turns.
Well, let's hope it's not the Titanic.
Okay, yes, well, we'll
Too
watch
soon?
out for the icebergs. In the chilly weather, we'll talk about the icebergs then. Kind of feels like it outside.
There'd be no icebergs. It would just all be ice. It's because you just have ice skates and go across the Atlantic. Because it's bad. It's
a little brutal outside.
All right, let's not leave people depressed. I don't have a joke to fill in here, but I will say that all guests of our show get lunch compliments of our good buddies at Canaletto, where we're going to try to make it there before we freeze to death.
We'll see.
Located at 208 East 60th Street. Phenomenal Italian food. Again, don't ask for my table, but say hi to Elvis and the staff there. Tell them Greg sent you. It doesn't mean you're necessarily going to get anything off your meal, but it's always going to be a good meal. Well, that's a show. Thanks to Lisa Rae for joining us. It's been a while.
I know.
Did you feel comfortable?
Oh, sure.
Oh, yeah, and don't forget, if you have any comments for Lisa Rae, ctl@bhsusa.com. If you want to praise the show, you can send it to the same
Well, if you
email
open
address.
it up, forget it. My mom will have a lot of comments.
Well, I'll have to give a shout out to Lenny and Lucy, especially since it was just Lenny's birthday.
It was just Lenny's birthday, January 9th.
So happy belated birthday. Thanks to Ray and Lena and Morgan. Start working on what you're going to wear for next week's show. Or maybe me and Ray will twin. I don't think we could find anything in our closets that...
I think Ray has to match us.
Ray's like, I don't dress... Yeah, probably. I don't dress like no economist, dude. I don't know if he'd say it like that. All right, any closing comments from anybody? Lena?
Stay warm out.
Yes. Oh,
Unless you're in
bundle
Florida,
up.
then we don't really care what you're doing. But we still love you anyway.
Bundle up.
And I'll close as I was doing on thanking everybody for the support we get. The show has become more and more popular.
Yeah.
Ray takes all the credit, and he deserves it. He makes me look good. And no, we do a lot of work on the show, and there's a lot of stuff that goes on behind the scenes, like of any show. But it's humbling to see how many people are watching this.
Yeah.
It
Cool.
makes me worried I don't prepare enough, but don't worry, I'm putting in the time. Anyhow, have a great week, and we will cross the line again with you next week.